Hello everyone, it's Davide here and welcome back to Learning Finance. So we have just entered November. Today is November the 2nd. So I'm going to give you 5 stocks which I think they will be very interesting during this month. Now, we have the US election results tomorrow, late tomorrow, depending on where do you live in the world. So it's a very interesting month and there are a lot of interesting stocks out there. So I'm going to tell you my top 5 for this month. The only thing I ask you is to leave me a like if you find this video interesting, especially an early like. It's very helpful for the channel itself, and subscribe to the channel. Let's begin. Alright, so 5 stocks. 2 of them are big ones, so to create a portfolio structure, while 2 stocks are more high risk. Okay, they have a higher risk and higher potential as they have a smaller market capitalization. And the last one is one which is very undervalued in my opinion at this very point. Has been destroyed by the market and now it's very undervalued. So let's start with the first one, guys. The first one is Facebook. So, if you have followed my channel, I'm a very huge fan of Facebook. And I'm going to bring you Facebook here. I have to, because we just had earnings. So the stock now is trading at around 265. The market cap $749 billion. P/E ratio just below 30, so 29.97. And now I have been saying to buy Facebook basically since April. Now Facebook went from 137 in March to 200. The top is almost $303 per share, which is a lot. Okay, it's more than 100% in just 5-6 months. So why I'm bringing you Facebook here? Because in my opinion, if you saw my previous fundamental valuation, the stock is trading now at a perfect fair price. So $260, in my opinion, is the fair price of Facebook. So it's not overvalued at this point. And we just had earnings with pretty positive actually. Anyway, people are quite complaining about the slowing number of new users, but that is something that we already knew. Okay, it's not something that it surprises us because we knew that new users were going up because of the pandemic and stay at home, but that Facebook is already a huge platform. Okay, with Facebook, Instagram, WhatsApp, we cannot think that new users will go up exponentially forever. What is important about it is what Facebook is able to do with the existing number of users. And in my opinion, this is the most efficient business between all the tech stocks that you have. The net margins are incredible and they continue to be incredible. And never forget that they have more than 55 billions in cash and cash equivalents. So they will have to do something with it. The balance sheet of Facebook is wonderful. It doesn't risk to absolutely no risk of bankruptcy, absolutely nothing. The debt is just ridiculous compared with the number, with the cash and cash equivalent that they have. Current ratio is higher than 4. So a very great company, very great business. And why I'm bringing you this? Because I told you that in my opinion, this is the fair price. And now we have elections. Okay, so what usually happens during the elections, and also 4 years ago has happened, is that someone will lose. I don't know which one. I'm not much into politics, so I'm very neutral here. Okay. Anyway, usually it happens that someone blames Facebook and other technology for interfering with the election. Something that happened has already happened in the past. So if that happens, and let's say we have, I don't know, a flash crash of Facebook due to some rumors or bad news about it, we are already at the fair price. So, in my opinion, everything that falls below the 260 area for Facebook is a buy, is a long term buy. The business will continue to make money in the future. You cannot destroy Facebook. It's absolutely incredible as a stock. I already have the stock. I already own a large part of my portfolio is in Facebook. I've been building the position during March and April. So, but if it goes below, again, 260 area, in my opinion, is a long-term buy. But even at this price, is a long-term buy. I'm very curious to see what they will do at some point with this cash. Now Facebook is all about what they will do next. What will be the next product? Okay, so online sales, online products, all these kind of things. Now the e-commerce is very, very something interesting. And in my opinion, sooner or later they will come out with a payment method on WhatsApp that works, and that will be huge. So I very like this company, and that's the first one. The second big stock that I own, and in my opinion it makes a very great portfolio base, it's Alibaba, guys. Ticker symbol BABA. Basically this is someone says it is the Chinese Amazon. In my opinion, this is a very, very great company, even though the market cap is big, okay, but it will get bigger. I have no doubts about that, simply because no one can deny that whether you like it or not, okay, we have to face reality here, and China will become the first economic power in the world. And I don't know if it is a coincidence or not, but this virus put them in an advantage position. Okay, so they are comparing with us. So Europe and US right now, it's a mess, while China is pumping a lot. Okay, is building a lot. The economy is going up, and we cannot deny it. And even just because of the number of people who lives in China, it's like 5 times the US ones. It is something that you cannot change, okay? And this is probably the most important company of China, Alibaba. Now, obviously, they will continue to do retail and also the cloud business. Their cloud business is the most important in China and is the third most important in the world. And right now, they have also this new one. So, Ant Group, which is a financial holding with fintech, okay? It will be the biggest fintech company in China. And Jack Ma is involved, and it will be the biggest IPO ever. There is gonna go public like in a couple of days. And guess what? We cannot invest in it because it will be traded in the Hong Kong Stock Exchange. So from Europe or US, it's not easy to buy those shares. Anyway, Alibaba will hold 33% of this company. So this will be huge, but it will benefit also Alibaba. And it is just something, a bonus up to what they are already doing. Now, honestly, I see Alibaba way above the $1 trillion company in the next few years. This is a business that is huge, but differently from Amazon, has a current ratio of 2. And it is a very efficient business, okay? More efficient than Amazon. If you go to see the net margins from Amazon, they are ridiculous, okay? Basically, all they make is all costs. This is not the same for Alibaba. And in my opinion, this is a very great stock to hold. As we cannot deny, at this point that China, investing in China in the next 10 years, in my opinion, it will be profitable, very profitable. And also there are companies, US companies, which are moving, which are trying to create investment fund in China, because those kind of stocks, they were banned from foreign investors. But now it looks like things are changing. And like, for example, BlackRock, they are the first US company which owns an investment fund in China. So it's important, it's a very important environment, and this stock will obviously do well in the next 5 to 10 years. I have no doubts about that. So it's now trading at $311 per share. For me, it's always a buy at this price as well. Now let's start with smaller company and higher risk. This is Lemonade, ticker symbol LMND. Now, I did a video months ago about the company when they went public. And I said, look, this is a very interesting company. What it is a tech insurance company. So they are trying to, let's say, disrupt, but not disrupt, take a piece of the cake in the insurance market, which is around 5 to 10 trillion dollars market, by integrating the artificial intelligence in it. Okay, so with AI, they will have a very more efficient business. They don't need a lot of brokers, physical brokers, to do their transactions and policies. They will just use artificial intelligence. So this is very innovative, and I very like it actually. Now, in the previous video I made, I said this is a very important, a very interesting company. Anyway, it was overpriced, so I said I will wait. Now, I bought this stock in the last week, okay, when it was around $47 per share. But anyway, in my opinion, below 55 is a very interesting stock to own for the long term. Be careful. In January, they will have a dilution, a strong dilution. So it is very likely that the share price will go lower. We don't know that for sure, but it could be. So it is not something that it will go up from now to forever. The company is not profitable yet, but for the long term, I'm pretty confident about it. I mean, I like it. You never know how these small companies, they will do. A lot of they will fail. Anyway, this one, in my opinion, it is very interesting. If you are curious to see what Lemonade is about, just type lemonade.com and take a look at their website. This is basically, you go there and you are able to do the insurance by yourself, just online, just a chat box, basically, where you're not talking with a real person. It is a robot, okay, an artificial intelligent computer machine which is able to understand in a few minutes your risk, what you need, and do a price, okay, a great price. And then another thing they are claiming is that they are able to pay when something happens. So they are able to pay the claims in just a few seconds, okay, differently from other normal insurance company, which sometimes it takes days, and at the end they try their best to not pay you. So this is in my opinion, is the future of insurance. We don't know if Lemonade, it will be the future of insurance, but their business plan, their business model, in my opinion, it will be the future of insurance. So a very interesting stock to take a look at, Lemonade, ticker symbol LMD. The other quite small company I'm bringing you is Pinterest, ticker symbol PINS. Now, this stock, honestly, guys, I have to be honest here. I didn't know about Pinterest at first because I'm not too much in those apps and stuff like that. I mean, yeah, I use the normal one, but Pinterest, I didn't know it. And in Europe, let's say, yeah, someone uses it, but it's not so much famous yet. And that's something which I like it, okay, because the majority of people, they don't know about Pinterest yet, okay. So in terms of future potential, this could be something positive. We saw the stock just exploded in the last week. We see here this huge gap. Now, honestly, someone can say, well, it's not wise to get in after this huge gap. We had the top of the gap was like 25% in the aftermarket. So that was crazy. And we touched a top of 68.8 and now a little bit of pullback. Anyway, the stock remained interesting. So during the last 3 or 5 days, I took a look at what it is, how they do their business. We see that the majority of the revenue is made in the US. As we can see, the red one is US, the gray one is international. Anyway, what it is important to see is that the US monthly active users are way lower than the international active users. And what is the thing? The thing is the revenue per users is very lower for the global users compared with the US one, okay, which are more profitable so far. Now, the interesting stuff here is how about they are able to put those global users near to the US users in terms of average revenue per users, considering that the majority of monthly active users are international. That would be interesting, and that will push the revenues very, very exponentially up for Pinterest. Now, if you don't know what Pinterest is an app where basically you can just go in and search what you like, things that they are called pins, basically are just little vertical square advertisement in whatever you want. So if you like camping, you type camping, and then you will have items for camping when you can just, everything is clickable. So you just go there, you click, and you can buy the stuff online. Now, considering that the e-commerce is inevitable, I think that Pinterest is very interesting. Also, with the partnership that they made with Shopify just some times ago, and that makes you understand what's their plan. Okay, now obviously, right now they gain from advertisement, and they gain also depending on how many things they're able to sell. This is, one can argue, okay, they will have to face the competition with stuff like Facebook and Google. And that's true. That's obviously true. Anyway, the market is so big. And actually, if you try Pinterest, if you download the app, you will realize that it is very user-friendly. I very like how it is. It reminds me of something near Instagram. Okay, something that when you use it, it's around very smoothly, and you can do whatever you want, and it makes you want to use it again. And that is very, very important for an online application. Overall, even though we had this incredible spike, I think that long-term Pinterest is just at the beginning. This could be a very interesting stock in the next 5 years, in my opinion. So I'm going to see how the market will open today. We already had this pullback. If I get an interesting price, I will buy it. I will open a position, obviously not a huge one because it's quite a risky stock. Anyway, I have to consider this. And then, guys, here we have the last one. I told you it's one which is very undervalued, and that's it. Intel Corporation, ticker symbol ENTC. Now, as you can see, the company, which if you don't know is a chip maker company, has been destroyed by the market during the earnings of Q3 and Q2 2020. It's now trading at around $44 per share, which in my opinion, also considering technical analysis, it's a very interesting price to get in. Look at that. Look at how this area has been a very huge support for the stock over the last 3 years. Okay, and we are just now in the green square, and it's very likely that the stock will bounce back after this. Now, obviously, we saw in the earnings that in the previous earnings we had the delay of their 7 nanometer product to 2023. Now, this is not something positive for the efficiency of the business. And now in this Q3 earnings, we have that the data-centric declined. And this is a very important set of the business for Intel. Anyway, it declined, and they are claiming that it is just due to COVID pandemic. So this is something that they are saying it will go away in the next, as soon as this pandemic has gone. And we have to consider that they are not doing well right now, but despite that, this will be a record year in revenues for them. Okay, so this is not something that it's wasting money. This is a money maker company, and has always been. Okay, they have very stable cash flows, and they really like buybacks. So they will continue to do buybacks. They have put $10 billion in 2024 buybacks despite COVID, and they will continue to do so. It's a very stable business, and as we can see in the last 5 years, they have done very great. Look at these cash flows: 12 billion, 10 billion, 14 billion, 16 billion, and now we will have another around 16, 17 billion for 2020 as well. So even though investors are quite scared because they say, oh, AMD will take on Intel as well as Nvidia, okay, probably they will take a little bit of market share, but Intel is the biggest one, and you cannot deny it. They have a wonderful balance sheet, so they don't have a risk of going bankrupt, because look at that. Just when we see current asset 31 billion, while we go down and we have current liabilities 22. Okay, so it's more than 1, the current ratio, and they are doing great. Now this is 2019, but I saw the one that they just shared for the Q3, and it is very similar. Nothing to be worried about in the balance sheet. And also they have changed their portfolio of investment through a more artificial intelligence side of the business. So they realize that AI is the future, and they have sold part of their business, which it was not very efficient for them, and they invested this kind of money into more AI specific investments. In my opinion, at this price, I have done a fundamental valuation with a discounted cash flow for Intel, and I find a fair price of around $78 per share for Intel. So in my opinion, this is very, very cheap at this price. And I just bought it last week around this price. So $45 per share. I bought it. If it goes down even more, I will buy more. I think that this stock, after all this burden with the delayed and stuff, after all of that has passed, I think that it can climb back to where it was. Okay, so at least above around $60 per share, and even more in the next few years. It's a long-term investment. I really like it, and I really like also the technical view of the graph right now, okay, because this is a very historical strong support area. Look at that, how many times the stock just came there and bounced back. So we are here now. So those were my 5 stocks, guys. I hope you find this video interesting. Leave me a comment below, tell me what you think about them, or which one is your favorite. So leave me a like if you find this video interesting, and subscribe to the channel. As always, guys, have a wonderful day.